What matters to lenders is to know what your intended use of the basement space is. Whether it is finished or unfinished is not a critical factor. Some lenders state in their mortgage commitment that borrowers are not allowed to rent out any part of their property. This could pose a problem to both the lender and the borrower if their intent does not align. It is hard to say because the conditions of the finished basement does matter too, and to be honest, this question is best answered by a licensed appraiser. The appraised value of each property depends on how many features are in the property, as well as the comparables in the area. With regards to property appraisal, I'd like to clarify that as a mortgage broker, I do not have any influence on the property evaluation. This is strictly between the approved appraiser, which is by the lender, and the comparable properties in the area. This is a common misconception that a mortgage broker has a say on the value of the property for mortgage purposes. Lenders can be cautious with regards to including rental income towards the borrower's debt-to-income ratio qualification. So the rental income must have supporting documents such as a lease agreement, bank statement showing recurring rent deposits, and to some extent, the lender would ask for identification of the tenants to confirm if it's not fraud. If all documents are in line to support the rental income, yes, having an income-generating rented unit helps the borrower to qualify for a higher mortgage amount. While we are on that point, there is one thing that caught most borrowers by surprise, and I'd like to unpack that in this video. Do you know that most lenders would only account for 50% of the rental income to qualify borrowers? There is a reason for this limitation. Most lenders assume that half of the rental income goes towards upkeep expenses. However, this limitation varies from lender to lender. So it's good news for those who are listening now. I have access to lenders who account for more than 50%, and they do go up to 100% of the rental income to qualify for the mortgage loan. This product is good for homeowners and real estate investors. For homeowners, they can qualify for a higher purchase price. The flip side is I would have to make sure with them that they can continue to afford the mortgage payment month to month. For real estate investors, this is a great opportunity to take out more equity out of the property and recycle the funds for other income generating properties. In both cases, either you're a homeowner or a real estate investor, you will need to have at least 20% down payment to qualify for this product. It is safe since it is a Schedule I bank and its operation is regulated by the federal legislation. At Matrix Mortgage Global, we work with reputable lenders with verified identities, not some off-the-street lenders without background check. The name of the lenders will become clear to the borrower as I work with them. I can then address their specific questions as we go. Borrowers can choose to refuse the mortgage commitment if they are not comfortable with this lender. I never force anyone to sign a mortgage commitment that they are not comfortable with. I'm Jermaine Hinds, a broker based out of Toronto. I'm at Matrix Mortgage Global. We do mortgages Canada-wide.